Good morning, traders. It is Thursday, October 24th. Taking a look at the charts, we had some economic news come out, but it didn't seem to really move the market at all unless my trading system's really delayed. Overall, the market continues to grind where we expect it to grind here, which is the SP 500 working its way higher. Again, if we connect these tops on the futures chart, there is still room for the market to push higher. If we look at the SPY ETF during regular trading hours only, there is still lots more room for the market to continue to grind higher. It can still pop and move up and make that nominal new high. We talked about this the other day. The markets love to make a nominal new high, then sell off. It made a nominal new high twice over here, a little mini double top. Overall, if we came up and hit this upper end of the resistance, it would break this new high just nominally, and then we could see it very easily pull back down to the lower end of this range. Again, we're going to have range-bound price action. We're stuck in this range for now. If we break to the upside, we could see something fairly explosive. If we reverse, we're coming right back down, I think, to the lower end of this range, and if we break this level, we're going to see, I think, something pretty ugly. So this big pattern that is playing out is very strong. Huge volatility, huge waves of fear and greed, lots of volume. And when you break out of a pattern that has got lots of volume like that in big ranges, it means you're going to have some pretty big moves. So again, it doesn't really matter which way it breaks. We follow the trend. If it breaks to the upside, the stock market, we're likely seeing metals correct a lot deeper. If it starts to roll over or breaks down, then we're likely going to see the safe havens rocket higher and start a new leg up. So that's the SP 500 to me. As long as you know where the SP 500 is going or you follow it, usually it's going to guide you pretty well with what other asset classes are going to do. Now let's take a look over at bonds real quick. Bonds up a little bit this morning. Again, we talked about this earlier in an article talking about the cycles here trying to bottom out. We showed the cycles about a week ago. More or less, we're trying to see if this is going to carve out a bottom. The cycles do keep updating. It is showing we still have a downward bias. It's still a struggle here at this point, but you can see it's trying to etch out. Overall, it continues to trade in what appears to be this kind of formation here from this breakout zone and these highs over here. It's going to get squished into this apex, and then it's got a bigger range trading between here and here. Overall, we expect bonds to more or less just trade sideways in this range. Eventually, if the market breaks down, we're going to see bonds probably take off and have another leg higher. But overall, it is compressing into this apex, and at this point, it's holding what looks, if this is a bottom, then we're going to have this kind of support trend line form, and it could ping pong around in here eventually with some type of squeeze and pop out, breakout of some direction. Looking over at utilities, looked at this yesterday. Utilities up again yesterday. Today they're relatively flat pre-market, but overall they've come up. They're testing these recent highs. There is some fear in the market that it's going to roll over, that stocks are going to roll over. So money's kind of been going into this risk-off, somewhat stock sector. We'll see how things unfold. Overall, we're just waiting for the markets to start to reverse, potentially give us a short trade or to get long bonds or metals. We'll see how things unfold from there. Looking over at gold, gold relatively flat, and it continues to flag out. It feels like it's building up some energy. The bigger this pattern flags down and trades sideways, the more potential it's going to have when it breaks out. But at this point, it hasn't broken out yet. Miners, same type of thing, compressing into a falling kind of wedge pattern. Silver, similar type of thing, pulling back and consolidating sideways. That whole market is just kind of flatlining, and we could continue to see some type of new low if stocks push higher. We could see that have another bout of selling to some nominal new lows. We'll have to see how things go. It's on the verge of starting something, whether we're going to have a bigger pull off with the stock market rally or we're going to see a big rally as the stock market rolls over and sells off. But at this point, it is neutral and still in a short-term downtrend. Looking at natural gas, it's seeing a little bit of life today. It is up 1.7%. Obviously, the way ETFs work with contango and having to roll to contracts, they can underperform dramatically, like we saw yesterday. More or less, they should play catch up and should start to perform well. As long as natural gas, it really needs to pick up speed here. It really needs over the next 5 or 6 days, it needs to start to break out of this channel and break out. More or less, we're in this type of bottoming phase right across here. This is where we got long last time, and here we are with these bars here. And obviously, we got in here anticipating it to, if it had a quick momentum and a quick rally, we want to make sure we are in. But looks like it really tried to shake everyone out. A lot of people were bullish on natural gas, and that's what the market likes to do. If everyone kind of is into the play, they usually like to try and shake it out, and that's hopefully what has happened. Hopefully we'll see this take off and really start to extend and pull a big breakout here to the upside, much like we saw back in August and how we traded this move last time. Looking over at crude oil, down 0.4%. Yesterday it had a huge pop, and I've been talking about natural gas. Crude oil for a while. I just don't like the chart. If I like something and we've got a setup, I'm going to trade it. But most times, or more times than not, I don't like something, or I'm not confident enough that I want to take that trade. And crude oil's got this type of price action where, look at all the moving averages. Look at all this chop in here. I don't like to trade chop. You get these huge percent swings to the upside and downside. We don't really want to be playing those wild swings because it's really just a crapshoot. So big day yesterday. It is now getting right into the core of resistance through all this chop, and we're just going to let it continue to do its thing. I have really no interest. If we get some type of reversal, some type of pattern that looks good, we could maybe get in. To me, it still looks like a short position, but overall, not liking it. I'd rather just trade something that has got lower volatility and less of these spiky risk type of back-to-back moves. Last but not least, let's pull up the VIX here. You can see it's got this little bear flag formation. More or less, I don't look at the VIX really for formations, but overall you can see how there's a little bit of fear still hanging in here, and ideally we want to see the stock market based on our cycles to continue to kind of grind or hold up or move higher over the next week or so, and that hopefully would get investors really confident, and we see this kind of fade down a little bit lower below this 13 level. To me, that is a screaming point where the equities market likely putting in a top. Every time we see it get down to this area, we see the market have some big spike in volatility. We saw it again over here, another big spike in volatility. So we're hoping this is going to maybe fade back down over the next week or so, and if it gets down to this level, that's probably a prime candidate for a market top and for some type of spike in the VIX to take place again. So this is what we're looking for. More or less, fear is kind of holding, but time heals all wounds, and people eventually who are holding a little bit of fear eventually go, it doesn't feel that bad anymore, and the fear dissipates, and then boom, they get hammered. Right when they give up and they feel comfortable, they get another spook. So that's how the market's going to work. Time heals wounds. That's why bull flags and bear flags work well. Bear flags more or less is people healing and getting comfortable with the volatility, and then they don't worry about it, and that's when we can see the continuation fade in fear, and it will spike into a spook for everyone and shake investors back out. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.